Also, the instructor, Delante, definitely makes sure that any questions that you have does not go unanswered. Very genuine, very transparent, and really loves what he does. And that's one thing that I look for in a mentor.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Now sharing what he's learned with others by hosting courses on investment strategies.
To be able to pass that knowledge on to other people, it makes me feel like, I'm doing something that's valuable in life. This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
First thing I want to let y'all know is you can start a trading account with as little as $10, all right? And if you're not greedy and trying to get into this and try to make a whole bunch of money really fast, you would understand that even getting into it with $10, maybe you may not make a lot of money, but you can begin to learn the markets with some skin in the game.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
But what this lesson is about is, like I said, for the working person. You do not have to be in front of the computer to actually participate in the foreign exchange market. Did y'all know that? Did you know you don't have to actually press buttons to participate in the foreign exchange market? You don't always have to be in front of the screen.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Welcome to Markup Mondays, where every Monday at 8 p.m. Eastern Standard Time, we analyze the financial markets, educate the community on trading and investing, discuss world news and popular topics. I'm your host, Delante Brady, Chief Analyst and six-figure earner with Bold People Get Rich, and here are some things you need to know about this broadcast.
During the market analysis portion of this call, we often find areas in the market to trade or make our investments. To be updated on these entries, exits, and trade management, make sure you tap the 3 dots on my Facebook page and change following to favorites. This way, you'll never miss an update. To receive investment knowledge, exclusive deals, and updates, click the link tree in my bio and subscribe to our mailing list. If you're viewing this broadcast on YouTube, to be kept up to date, make sure you hit the like button and subscribe. This is an event made for the people, by the people, and we love to hear your feedback and answer your questions during the show. So please feel free to comment as often as you like. Lastly, all forms of investing do involve risk of loss and is not suitable for all investors. Increasing leverage increases risk. Before deciding to trade in any financial market, you should carefully consider your financial objectives, level of experience, and risk appetite. Any opinion, news, research, analysis, price valuation, or other information contained in this video does not constitute investment advice. No person or persons in this video is a financial advisor.
Welcome to Markup Mondays. Everybody go ahead and drop flames in the chat, drop where you calling in from, drop 7 in the chat. Let me know that you're here. My name is Delonte Brady, Chief Analyst with BPGR Investment Strategist and Snipers Anonymous. And here we analyze the financial market, discuss topics in world news, and I also educate on investing and trading. All right. The first thing that we always do, we always go back and we check what happened last week. Then we get into the upcoming news for the week, and then we'll get into analyzing some pairs and possibly discussing what's going on in the world. It's pretty much the same thing as far as the war going on in Ukraine. But tonight we're going to cover a couple of pairs. We're going to go over the dollar, the euro versus the United States dollar, the pound versus the dollar. We're going to cover gold. We're going to cover the United States dollar versus the Japan yen, and we're also going to cover the New Zealand dollar versus the United States dollar. All right, Denver, welcome to the call. LDG, welcome. JB, welcome. Dane, welcome. Everybody, welcome to the call. Let's go ahead and get into it. All right, so first things first, let's go ahead and review what happened last week. Last week, we placed a sale. I called a sale. Give me a quick second to share my screen and bring this up. All right. So last week for EU, this joint right here. All right, last week for EU, we called a sell. Here's the Markup Monday sell zone. Got in right here, little reaction, but it ended up pushing through. We had a tight stop loss, had a 20 pip stop loss. If you followed that trade as far as the risk and you only risked 20 pips, then you were stopped out of that trade. It did end up dropping and going down, and then it ran the chart and became bullish. So that's what happened with last week. Let's go ahead and look at the upcoming news, and then we'll analyze EU, and we'll look for more entries. All right, Christine, welcome to the call. Davina, welcome. Blake, welcome to the call. All right. So what we have coming up for foreign exchange news. All right, let's go ahead and get to my FX book. Everybody who follows me knows that I use my FX book. I used to use Forex Factory, but I just found out that it's more information, or they have more news releases on my FX book, and I only focus on the red folders now. No more orange folders or yellow folders. All right, so let's go to our economic calendar. See what's going on for this week. All right, so it doesn't look like a lot going on, but we do have inflation rate news for the pound on Wednesday. As far as Monday, Chairman Powell already spoke. And for EU, we have one red folder. That's going to be this morning, or this coming London session at 3:30 in the morning. The ECB is going to be speaking. Dinos. All right. On Wednesday, we have the United States dollar with some red folder news. So Powell is going to be speaking. New home sales information or data is going to be released, and then we have some red folder news for the euro, the NATO summit. So that's going to be a red folder news release at a strange time. That's outside of my trading window though, so not worried about it. Just going to watch price action on that. For Thursday, we have some heavy news for euro starting at 4:30 in the morning. A lot of red folders going all the way into 5 o'clock in the morning. So in between 4:30 and 5, we have about 6 red folder news releases for euro. So on Thursday at 4 in the morning, take note of that. Be aware that that is going to happen at 4:30. And then for the pound at 5:30, we have a lot of red folder news releases. And then during the New York durable goods, jobless claims, that's going to move the market. Initial jobless claims. All right, so Thursday is going to be a busy day for the pound and the United States dollar and euro. All right, Thursday. And then for Friday, all right, a lot of pound news at 3 o'clock in the morning. And then euro at 5 and United States dollar at 10. Okay, so let's go ahead and get into analyzing EU. And if you have any requests, if we have time to get to it, as far as analyzing pairs, we'll just go ahead and drop that in the chat. And if we have time, we'll definitely get to that. Also, I'm putting together the playlist for Markup Mondays. So if you have anything in particular that you would like to hear, go ahead and drop that in the chat. Try to make sure that it's kid friendly so we don't get kicked off of Facebook Live. All right, so here's what I have for EU as far as targets, upcoming targets. All right, overall, and you know what? Before we analyze EU, let's go ahead and analyze the dollar so we can get a directional bias for all of the pairs. All right, it's important to know what the dollar is doing because almost everything we trade is going against the dollar. So we want to know what the dollar is doing, and that's going to give us some insight on what everything else is doing. All right, so the US dollar is currently bullish right now. I was expecting it to pull back a little further, but it reacted off of the sell zones and is currently breaking through the sell zones and headed for another previous sell zone. So I believe what's happening is we're headed for this previous high here. All right, and this looks real bullish. We have a real strong wick right here, and then we have this strong candle that's forming here. So I believe that we're going to be bearish on anything that is going against the US dollar, right? Because I believe the dollar is bullish. As far as right now, price action, what's going on right now at this moment, this looks bullish to me. Overall, I believe that the dollar is bearish. We're currently, consolidating and it's a pullback. Let's see. In the grand scheme of things, right? But currently it is bullish. A lot of US pairs are overbought. So I do see some sell opportunities on UJ. We'll get to that in a second. But for right now, I do see the dollar being bullish. All right. So we'll be looking for sales on EU, GU, right? Gold. And then we'll be looking for buys on UJ or anything where the dollar leads. We'll be looking for buys. Right. I'll find a way to share the screen. All right. right, now let's look at EU. Okay, so I do have a buy zone, but I would be more apt to look for the sell. All right, I would like to see these highs get cleared here. All right, because we have some liquidity resting above here, above these highs. And so this looks like a nice area to sell from. So it's like a nice area to sell from, or at least get a reaction. If we get a pullback on the dollar, this is what I would like to see. I wouldn't take it. I want to see this high, these highs get cleared before I take the sell. As far as the buy, this would definitely be a reaction. As far as the trade setup, of course, this is my personal setup. If you want to risk more and go for more as far as pips, feel free. Everybody is grown. But this would be another 1-to-1 ratio trade. So 30 pip stop loss, 30 pip take profit. And then for the sell, because I'm more bearish on EU and more bullish on the dollar, right? Same 30 pip stop loss. But for this, I would actually like to see this come down a little further below these lows. And so let's take that 80 pips. All right, so a little more than a 1-to-2 ratio trade, or a 2-for-1. All right, so that's what I have for EU. Would like to sell from in between price level 1.10700 and 1.10, let's call it 800. All right, and then for the buy, for the reaction, we got 1.09830 and 1.09700. 30 pip stop loss on each trade. For the sell, going for 80 pips. For the buy, going for 30 pips. All right, next let's go ahead and analyze the pound versus the dollar. See what we have for that. How are you guys? How is everybody feeling about what's going on? Is anybody keeping up with the war that's going on in Ukraine? What are you hearing? What are your thoughts? Do you feel like Putin is the enemy? Do you feel like Ukraine is the enemy? Are you, neutral? Really don't care about either side? What are your thoughts on the war in Ukraine? All right, so for GU, we have a head and shoulders pattern, which is forming on the higher time frame. All right, and so I don't like to use retail patterns for entries for the lower time frame, but from the higher time frame, I will use them for a temporary directional bias. I believe what's happening right now is a head and shoulders pattern is being formed, but I believe that this is being formed to be set up, or to be basically to fail. I believe it's a head and shoulders pattern, a head and shoulders pattern setting up to fail. If you trade, write this down. Write this down. I haven't talked about this in a while with my students, but when you see an inverted head and shoulders pattern develop within bearish market order flow, more than likely that's setting up to fail. More than likely it's setting up to fail. When you see a head and shoulders pattern forming in bearish institutional order flow, all right, there's a good chance that head and shoulders pattern is being set up to fail with the low
or the head being the target. Same thing in bullish market order flow. If we have bullish market order flow, let's go ahead and flip this just so you can see it. If we have bullish market order flow and we have a head and shoulders pattern form, more than likely that head and shoulders pattern is forming to fail. All right, now you may get the sell, we may get the fill of this imbalance, or let's flip it back, you may get the buy, but more than likely it's coming to fill this imbalance to go down, and we would target the bottom of this head. This is a trade where I will be targeting the bottom of this head. All right, so we got an inverted head and shoulders within bearish market order flow. We have some equal highs that formed here, and then we have imbalance to target here. We also have liquidity forming. On the way up, we got this little trend that's forming. Okay, and with me being bearish or bullish on the dollar, for GU, it's in a weird place. I would like to see this get swept first. I would like to see these highs get swept first, and I will, excuse me, I would like to see this imbalance get filled, and this is the entry that I would take. This is the setup that I would be waiting on. All right, I'm not doing anything with GU in between here. All right, unless we start to drop down, I would like to see a move up first before I do anything with GU. And I have a good feeling that's probably going to happen in between Wednesday and Thursday with all the red folder news on GU. So that's what I have for GU, expecting to sell from this imbalance area. And as time approaches, I can get more detailed, but we do have some double bottoms here. All right, we can drag that across. I believe that'll be a very sensitive area. It's 50% of the imbalance. That looks like a high probable trade set up for me for a sell and for a nice amount of pips. If we took it from here, you can put it above this high. Let's go. Say we had a 40 pip stop loss. So right above this high here, or you know what? Let's go 50. Put it above this high right here on this 4-hour candle over here. All right, so 50 pip stop loss. And you could take some off the table at 50 pips, which would be right back down at the equal highs. But ultimately, we're targeting this low down here, this head. We're talking about 297 pips or 269 pips or 270. So that would be one I would hold on to, because this is a trade setup. All right, so I will wait on this, and that is the trade setup for GU. And I'll leave that like that. We'll keep track of that one. All right, let's go ahead and get into gold. I have an extensive analysis on gold. As far as long term, I have something for the rest of the year. I've been talking about investing in gold. Now, gold is not, the end all be all. You won't get, a large amount of gains with gold. But I like gold because it's fundamentally is easy to decide to invest in it, right? Because it's often looked at as a hedge for inflation. It's looked at as a safe haven currency, and anytime things become uncertain in the market, gold tends to rise. All right, so that's an easy analysis in itself without even looking at the technicals. We're just talking about the fundamentals, news, and the sentimentals. It's easy to decide to buy gold or even silver. Any precious metals. Period, are a safe haven. But speaking about, on gold, let's look at this. We had a 6-year consolidation for gold from the year 2013 all the way up until the year 2019 when I started trading gold. I remember this run up because I remember wishing I could have caught it or understood, what was going on. I remember just seeing a lot of people make a lot of money trading gold. But this is when gold broke out of a 6-year consolidation. All right, so that's major. Going into 2020, between 2020 and 2021, we continued the bullish trend and we came back down to kind of retest the top of that consolidation. Didn't quite reach all the way for it, all right, but it came close, and then we continued up. So 2020 through 2021 was another bullish year, all right. And then we had 2021 through 2022, which was a year of consolidation. All right, gold paused for the whole year of 2021, 2022, and now it looks to be breaking out again, right? 2022 through 2023. So because the market tends to repeat itself, statistically, when you look in the past, when you see higher highs and higher lows being formed, they tend to continue to make higher highs and higher lows. And with the conditions of the market in the world right now, I feel good about gold having a bullish year this year. All right. We're approaching the end of the third quarter, or really the third quarter has already ended. We're in the second quarter. But for the third quarter, we had bullishness. And I believe what's happening is we're pulling back, and we're pulling back to the top of that 1-year consolidation. And so I believe we're going to treat it like this 6-year consolidation was treated by this 2-year bull run. All right, we had a 6-year consolidation, a 2-year bull run, a pullback, 1-year consolidation, and I think it's time for another bull run, 2022 through 2023. Now, where do I think a good level would be to get in for a buy as far as long-term investing? I would say in between the price levels of let's call it, let's say 1840. All right, 1840 per spot of gold to, let's go to half of the consolidation. You know what? Let's just make it 1,000 pips. Let's call it 1740. So in between 1740 and 1840 on gold is where I believe will be a good price to invest in it. All right. Now, of course, it's hypothetically speaking. You invest at your own risk. This is not investment advice. Legally, I have to say that. But hypothetically, this is the area that I would like to buy from on gold. As far as what's going on now, short term, I believe gold is bearish. I believe gold is starting to turn bearish. And the next area that I would sell from, honestly like to see it come back up and revisit this level for a sale. And I will be targeting these lows. I got a low here, and then if it comes down this low, that's when we're getting into an area where we want to be looking, to buy from, or looking for buys or rejection. But yes, I am bearish on gold. This is where I would like to see it come back up to. We had this intermediate high form right here, so I would like to see that get taken out. I always like to see highs and lows. Highs get taken out on sells and lows get taken out on buys. Those are some of the best setups, the most high probable setups. So that's what I have for gold. All right, now let's go ahead and get into the United States dollar versus the Japan yen. Let me look at some of these some of these comments. Some of you guys chimed in. All right, so Blake Lewis says Russia went to the gold standard. It means that others will follow once inflation hits the point where the dollar is losing strength. China holds all the cards right now. Sounds about right. With Russia going to the gold standard, definitely backs up what I was saying, and it all lines up. It all lines up as far as the market conditions. And yeah, China holds all the cards right now. I think that was something strategic for Russia too. I believe they wanted to be forced to ask China, for help, for support, because once China supports Russia, then that's really an act of war, right? That's an act of war against the United States. So I believe that was a strategical move by Putin. Right. James Buffer said, not trying to be funny, but it's good. It's the G-Mints doing what G-Mints do. War readjusts economies, usually only in favor of the rich, wealthy, and bold opportunities or bold opportunists such as us. Right. Right. Exactly. And looking at history is good to know. It's good to be able to look back in history and understand what happened economically, because it gives us an upper hand on, what to do. There's so many ways that we can beat inflation. Got information coming out soon on different ways to beat American inflation. All right, Blake says, I'm investing more into gold and silver than I am investing into crypto. Same here. We on the same wavelength. We always have been. Same here, man. Smart man. Smart man. JB said, what was old boy's name that traded gold? Picasso something. Traded gold. You probably talking about Luke. Luke Longmire. Luke Longmire was known for gold. All right, but let's go ahead and get into the United States dollar versus the Japan yen. Stop sharing this. Now for the Japan yen, I see a selling opportunity. This is extremely overbought. Like I got to keep dragging my my imbalance indicator up. But this is what imbalance looks like, y'all. This is clear imbalance going on right now. We did have a little pullback in here that could be looked at as a buy zone or a reaction area. All right, we found a little support here. I don't know if we can maybe look to the left and see if we can find some confluence as far as why that would do that. Let's see. Let's drag this across and see. Okay. All right. So here's what was responsible, or here's the evidence that we have. We had some highs form over here, weekly highs. And so we paused in that area. And so if we come back down to the weekly highs, then this could possibly be a buy zone or an area of support or an area where we would see reaction. All right, see how we had that little pause right there. But overall, this is imbalance. I'll drag it back down below that. We got imbalance here. And we're really in the area that we should start to sell from. UJ is extremely overbought, and I believe it's in the area where it's about to sell from. So we have the bottom of a 4-hour institutional candle that formed on February 2nd of 2016. So let's go ahead. Let's pull up the 4-hour and let's go back to February 2nd of 2016 and see what's going on with that. Second, 2016. Oh, and if you're new on the call right now, don't mind the ruin that you hear in the background. That's my rooster Rusty. He came into the picture about a month ago when we moved to Africa. I never wanted to harm an animal until, you know, Rusty kept waking me out of my sleep. But to cope with it, I decided to name him instead. So that's our rooster, Rusty. That's Rusty the rooster, y'all. All right, so back back in February, back in February of 2016, this was the last move that happened. We came down and broke structure after that. All right, so this is a major area. Also have a mitigation area here. Very significant level. And so because this is where price currently is, where we're headed, I believe we're going to see rejection from this area. All right, so this whole zone is a sell zone for me. Let's go ahead and find out what the range of the zone is. It's about an 85 pip zone, right? But yes, I'm expecting the United States dollar versus the Japan yen to drop very soon. All right, here we go. All right, so to be safe, what I would like to see for a sell, I don't want to just sell from anywhere just because it's in a sell zone. I would want to see some rejection happen. All right, so I would have to see some lower lows getting broke, and on the daily, I would like to see that 3-bar pattern form. All right, something like this. I like to see a swing high form. All right, with the candle pattern, that looks something like this. Swing high, high at the top, lower highs on either side, and then previous lows getting broke or broken, daily lows. And then I will be looking for a sell on that 4th day. All right, now let's go ahead and get into NU. Luke Longmire, that's him. Yeah. All right, is there anything else that you guys want me to analyze? Because NZD USD, this is the last pair that I have on my list. All right, so I am bearish on NZD as well because it's going against the United States dollar. And as you all know, I'm bullish on the dollar. All right, so where I would like to sell from is this area here. Let's go in and investigate on the smaller time frame, see if we can find anything more specific. Sell off, boom, boom. Okay, yeah, so I'm gonna just say this zone right here. Let's find out how many pips that is. All right, it's only a 7 pip zone. We had some highs form here. And like I told you before, I like to see highs get swept on sales. All right, so here's the sell zone. It's a 15-minute sell zone for NZD USD. And that is in between the price level of 0.68940 and 0.6900. All right, which is a very significant level. So let's go ahead and this is where it should be. And so that's the specific area that I would sell from. I would like to see it come close to that white line there. All right, this is the sell zone, but within that sell zone, I would like to see it come close to that white line, and I would like to see a reaction from there. More than likely, the way it's looking, we may poke below this low here or create an equal low. So I'm gonna just put a line right here, and we'll monitor that as well. But more than likely, it's going to be a reaction. It may poke down a little more, but ultimately, I'm waiting on this sell here, and hopefully, we come back up before we go down, because that leaves us more room to go down. Right? If we go up before we go down, that's a higher probable trade. If we go down, then come up, it's a possibility it could be turning bullish. All right. All right, but no buys, not looking for any buys on NZD USD, just sales. And that's what I have. And I will post these on my page. So for anybody that's watching, and I will also keep everybody updated on Markup Mondays. So Christine said, oil, please. All right, we will go over oil. Oil is another indicator pair. I call them indicator pairs. They tell you, they don't tell you, but you have an idea of what is going on in the world based on what indicator pairs are doing. So oil is an indicator pair. Gold is an indicator pair. The dollar is an indicator pair. Let's see. Let's pull up this old EU. Let's take a look at oil. I actually have oil as a bench pair. Here we go. All right, so of course, oil is very bullish because of the war, what's going on. All right, this ended up turning into a mitigation area. And so it's really a simple analysis because oil is so bullish and what's going on in the world. Obvious area of support would be here. Right, as far as another buy zone, we're currently in a mitigation area now. Honestly, I would like to see oil pull back down to about 106. As far as trading goes, I would like to see it pull back down to like 106. I would be expecting a reaction, or I would expect this purple area to be sensitive. Green area is the buy zone. Where would I stop buying? Below the low. All right, and as far as targets, now if you trade in gold, meaning you're not investing in it, you're catching the ups and the downs. You know, in foreign exchange, we can sell it as well and make money on the way down. The next resistance area I see is here. And then where this purple zone is at the top, I also see another resistance area. So some more investigation. Currently at a resistance area. If we break above this, if we break above this high here, expect this area to become a future sales or buy zone. All right, I'll just make it purple. Yep, expect that area to become a future buy zone. All right, so if we break through this level, break above this high, and we sell from this zone here or this area here, All right, and that's on the trading side. So I would like to see oil come back down to this purple zone or within the green zone, and I would be targeting the last high. Keep it simple as far as trading. As far as investing goes, I would like to see it come down to. I would like to see it come down to this purple green zone. So I would buy from in between the price levels of 102 and 107. And I'm taking oil beyond the last high. We look at it historically. The highest gas has ever been, or the highest U.S. oil has ever been, is about $147 a barrel. And I believe we're headed for that. I don't know if it's going to exceed it before it pulls back, but here's the all-time high here. Right, so we have the all-time high. If I was to invest in oil long term, I would take it to the next high, and I would take some profits. I would take a certain percentage of profits at this high, and then see, with the fib on it, and I would take it after that. I would take it to about here, about $138 a barrel. That's where I would expect a pause or a reaction. And then I would be waiting for it to pull back down to a previous high. But I would take some profits here as well, maybe get in again and take it up to the all-time high, which is 148, and it'll probably exceed that. We'll see. Hopefully that makes sense, Christine, but that's what I have for U.S. oil. Right, no problem. All right, and last but not least, let's go ahead and look at Litecoin for Denver. Got you. Yeah, let's see what happened from the last analysis. Denver, do you still have that marked up from the Markup Mondays where we marked up Litecoin? Because I'm not sure. I'm pretty sure I don't keep track of Litecoin, so I'm not sure if the markup is still there. Let's see. Yeah, I don't think it is. Still bearish. I am still bearish on cryptocurrency. So I believe what's happening right now is a pullback. Just following basic market structure. We just have lower highs and lower lows being formed. All right, so we have our low, highest point, lower high, lower low, lower high, lower low, lower high, lower low. Right, and so it looks like it's been doing like 80% retracements. So I would expect it to do the same on this, and just going based off of looking at market structure, we know it tends to repeat itself. It would make sense to sell from this area here, or to at least expect a reaction. That is in the golden pocket in between the 70 and 80% of the retracement on the fib. It may even go a little higher than that and, reach up. But this zone, this area here, I believe is going to be a strong rejection zone, which means we could possibly be temporarily bullish. It could be some buying opportunities on the lower time frames. We did clear a high here. And so, let's see, look like the first area it could return to and react or find support is here. Let's drop down to the lower time frame. All right, so this will be the high that's being targeted. This is the most current high that it looks like it's about to start reaching for. All right, we had our pullback, came up. We had our second pullback here, pushed up. So let's see if we can find anything in here for a buy. A logical area where it will pull back to. Okay. As far as short term, long term, I'm bearish on Litecoin. We'll go back out to the higher time frame so we can get a look at it again. But right now, I believe Litecoin is about to reach for this high right here. I'm not a fan of buying breaks. It is breaking right now. It could be taking off, but I would like to wait for it to pull back. And I would put my, it's tough. You know what? That would be trying to, honestly, I don't trade like that. I'm showing you the possible opportunities, but I'm real patient and I don't mind waiting on the market. I do believe it's buying, and I do believe it's about to push beyond this high. I don't see any buying opportunities. I feel like the buying opportunity already happened. Like the entry got missed here. All right, and so you will have to wait for more information or more data to form to look for another buy. But as far as the sell, I want to see Litecoin come up here. All right, which is going to be a 79-80% retracement that we were talking about. And that's what I will wait on. I will wait on the sell. And if you're going to get in for the buy, make it a long-term buy and, look to buy up to the sell zone. Maybe with a stop loss below here. If you just can't wait for the sell, stop loss below the low. All right, so yeah, expecting Litecoin to maybe get up to $128 a coin, 130 bucks a coin, and sell from that point. And I think it's gonna go even lower. Get down to probably $80 a coin. But that's what I got for Litecoin, Denver. All right, but that wraps it up. That's all the pairs. I will have to find in my notes. Okay. That's all the pairs. That's it. That's what we have. That's what we have for Markup Mondays. I dropped some educational gems, during the call. If y'all caught it, hopefully y'all was ready, taking notes. But that wraps it up for this call, guys. Appreciate everybody coming on the show. It wouldn't be a show without you all. So really appreciate you. This goes down if you're new or you're watching a recording. We do this every Monday at 8 p.m. Eastern Standard Time. We analyze the financial markets, educate the community on trading and investing, and we discuss world news. And we just pretty much give everybody, the goal of the call is to give everybody a head start for the week, or, a second opinion, second insight. All right, my analysis is not the end all be all, but maybe it'll help you see something that you didn't see, or just give you some confirmation and give you, more confidence going into the week with trading with your own analysis. So Denver said, Asante, karibu sana, kaka, karibu sana. Thanks, James. Appreciate it. He said, great call. Feel free to drop, in the comments too, what you learned from the call. I go through, I look at the messages. If you learned something valuable from this call and you remember it, go ahead and drop that in the comments. But again, I love you all. That wraps it up for Markup Mondays. Some of you I will see in the chats and on the charts, and for everybody else, I'll see you next Monday. Don't forget to subscribe to the Markup Mondays mailing list as well. The link is in the bio. There is a direct me link, and if you go there, it'll say subscribe to Markup Mondays. I had to come up with a new list or a new mailing list, and so I will keep everybody updated on any updates on the show, any updates on the trades, trade setups, right? I'll be sending out investment gems. So go ahead, and if you aren't already subscribe to the Markup Mondays mailing list, and I will see you all next Monday. Davina, it was good to see you too. Thank you for tuning in. Hope you learned something or got value from the call. All right, peace, y'all.